Hey, what's going on, everybody? Wanted to jump back on here, get our first market update for 2024. January coming to an end already. Hopefully, you guys have had a great start to the year, but wanted to give you some quick updates on what's going on our end on the investment front and a few things to just be looking out for headed into the new year here. So jumping right into it, let's look at how everything's been performing. So looking at the major indexes, we've had a good start, really good start to the year. Dow Jones is up 2.5%, S&P's up 4%, NASDAQ up 4.8% today. If you guys hadn't seen Friday, February 2nd, as I'm recording this, Meta Platforms came out and announced that they're going to be paying a quarterly dividend. Their stocks are up 20% today. So Meta absolutely killing it and leading the way. As you know, a lot of those, the Magnificent Seven was basically all of last year. That rally's continuing to go and push the NASDAQ forward right now. But all the major indexes are doing well. A few things that we've changed within our portfolios. We did sell Key Corp, one of the bank stocks that we were holding. So if you've been looking at, your Clear One portal and your portfolios, you'll see that that position is no longer there. Another position that we're looking to get rid of probably here in the next week is Huntington Bank. But since we bought it, about 6 months ago, it's done very, very well. But the valuations are starting to get more at a fairly leveled price. So basically, there's not enough juice left to make it worth the squeeze. So from a valuation perspective, we're going to be selling that one here. And longer term here, going throughout the remainder of the year, we're going to be looking to potentially add some utility stocks. That sector seems to have the best current valuation. So that's where we're really looking right now. We haven't selected any individual stocks to add to that portion yet, but I'll keep you updated as we do. American Express is the other position that we've been holding. It's killed it, had a really, really good run. So that's still going to stay in the portfolio. We're still very bullish on that for the long term. Another one that I like to keep reminding you guys about is this LGOV position. That is our long duration bond fund. So again, I know I've talked about this quite often on here, but just as a quick refresher, how bonds work as interest rates go up, bond prices go down. They have an inverse relationship of each other. So again, I've told you guys this narrative, but just want to refresh you on it. Being that we know that we are headed closer to the end of the rate hike cycle than the beginning, at some point the Fed's going to cut rates, right? And I'm going to talk more about the Fed here in a little bit, but we don't know when the Fed's going to cut rates. If I had a crystal ball, we could buy this position the day before that they announced that they were going to do it, but we really don't know. But again, when they do cut rates, rates go down, bond prices are going to go up. Longer duration bonds have a greater price movement in terms of relative price changes or relative interest rate changes. So again, a longer duration bond is going to change more in price than a short duration bond. So when interest rates go down, long duration bond prices are going to jump even higher than short duration bond prices, which is why we bought into this LGOV position. Again, we are ahead of the game on this one. We know that, but being that we do not know when the Fed is going to cut rates, we just want to be prepared for it because we really do think that it's going to happen at some point this year. Another thing that I wanted to point out really quickly was people are asking about their 1099s, which does come up every single year, which I get it. They're wanting to get your taxes done. They normally don't come out until the middle or end of February. And I know I'm waiting on them as well. It's not us. It's not Sierra Ridge that sends out the 1099s. We're actually having to wait on the different mutual fund and ETF companies that are managing these positions. So they're the ones that do the reporting and they're the ones that send out the 1099. So it's out of my control, but I just want to give you a heads up that that's when you can be expecting them, middle to end of this month, and you can go ahead and get all the stuff done for your taxes. Also, next couple months, we have until April 15th, but getting your solo 401k, SEP IRAs, and IRA contributions in. I'll be reaching out and reminding everybody that hasn't done so. Plus, I'm going through and doing all of the semi-annual meetings. So if we haven't gotten together yet, definitely feel free to reach out. We can set up a time, but for all of you that I have not met with yet, I'm going to be reaching out and setting something up so that we can get together. But we want to get those contributions done before April 15th. So another deadline to look out for. Okay, the last thing that I wanted to talk about here was I was at the golf course a few weeks ago. It's been raining, as you guys all know, up here in Auburn. It's been insane. I mean, it's dumping again today. So not a whole lot of roping going on, not a whole lot of golf on the weekends. We actually shipped it down to Stockton just to get out of the rain for one day. And we went and played the reserve at Spanos down there. Really nice course. But anyways, when we were down there, one of my buddies that I was golfing with, he said, all right, Hunter, I've been reading that AI is going to take off. And as a result, the Dow is going to finish up in like 15 to 20% this year. It's going to have a huge year. It's going to optimize everything. I mean, AI is the new way of the future, and companies are going to have huge profit increases from it. We're supposed to have a massive year. And then, which, I don't disagree. Who knows? I mean, we don't know what the Dow's going to do this year. But 2 days later, literally, that we were golfing on a Saturday. This was a Monday morning. I was doing a review with a client, and they were saying, "Hey, Hunter, I'm really worried about what the markets are going to do this year. What I've been reading, we have an election year. There's turmoil overseas. Maybe the Fed's going to keep raising rates. We don't know, but everything I'm reading is saying the Dow is going to be down double digits this year." But it's always kind of funny because you could read these things and be on such opposite ends of the spectrum. And just depending on what you're reading, is greatly going to influence the decisions and the feelings that you're having, which is totally okay. But I just always want to remind you that we are investing for longer than the next 6 months. Then the next year, right? We're investing for years out in the future, depending on what your goals are. We're talking about all this stuff together, but I wanted to show you just how crazy it really can be with a couple articles here. So this was from Wednesday, 2 days ago. If you guys were seeing, the Fed came out basically, and they said, I don't think that it's likely the committee will reach a level of confidence by the time of March meeting. Everybody was thinking that the March Federal Reserve meeting, they were going to come out and say that they were going to cut rates, which is, again, what everybody's looking for. That's going to be the next big catalyst that's going to push us forward on continuing to have this great momentum. So basically, traders were closely watching the Fed announcements for signs of when the central bank would begin to cut rates. Powell seemingly threw cold water on the market's expectation for a March cut. So he came out and said, yeah, probably not going to happen. And the market dropped hard. NASDAQ fell 2% that day. It was the worst day since September and the worst day since October for the NASDAQ. All the doom and gloom. Here it comes. We're now headed down the water slide and headed for a recession quick. 2 days later, this is on Wednesday. Now we're headed into Friday, right? The labor market has remained resilient in the face of a rate hiking campaign from the Federal Reserve. But other data this week had shown signs of softening. That's what we're looking for. Though the Jerome Powell sparked sell-off just 2 days ago is almost a mere footnote by now, Friday's job report could once again shift expectations on the Fed's rate path, especially as Powell suggested that a strong labor market is actually a good sign. So now all of a sudden, we're just on the opposite end of the spectrum here. Oh, yeah, we're getting softening numbers. This is great. The Fed's going to have to cut rates again. We'll see what, it's crazy. This is a 2-day swing of just crazy volatility. So all of that to say, I know we talk about this quite often, but we can't invest for timing what the Fed's going to tell us. We have no idea. We don't know what's going to happen with elections. We don't know what's going to happen overseas. We don't know how the Federal Reserve is going to respond to all this stuff. And that's okay. It's okay to have some unknowns. We have to control what we can control, which is why I talk to you guys so much about identifying, what our goals are and what our time horizon is, and really what we're investing for far beyond just, what's the Federal Reserve going to do in the next 6 months? So just keep that in mind. Again, I know it's probably going to be a volatile year. Election years always are. Historically, election years, though, are relatively good for the market. So personally, I am bullish on this year. Our investment committee, we don't think that it's going to be as crazy good as last year. It's hard to keep that big of a momentum shift moving in the right direction. But overall, we're still thinking that we're going to see good signs in the market this year. We're going to have a good year for equities. And actually, we're very, very bullish on our bond portfolio, how we're setting that up with our long duration plays as well. So I hope all of that makes sense. Again, if you have any questions, as always, give me a call anytime. I'm happy to chat. But if we haven't met one-on-one, we're going to be doing so soon. I do want to give you guys updates on all of your personal portfolios and make sure all is well on your end as well. So hope everybody's doing well. Again, you know where to find me. Give me a shout if you have any questions, but we will talk to you soon. Take care.